Friends, in this video for I Thought Wealth, I am going to talk to you on the topic chemicals. Is it time for caution? There was a time when the chemical industry was untouchable for the investors. What was it that people said in those times? First, they said we don't have scale. Second, they said we don't have cost advantages. Third, they said we don't have technology. Fourth, they said our markets are not big enough. All these things changed over a period of 2 decades. Importantly, companies did not need to invest too much. The investments made in the chemical sector over the years had created assets which remained underutilized for very long periods of time. They had developed products which didn't get the kind of markets they deserved. So, investments made in an earlier era were there, they needed to be sweated, and the benefits were there for the asking. Importantly, at that time, imports were happening at indiscriminate prices not connected to the costs. We all know where these imports came from. Everybody wanted to kill industries which manufactured products, thereby opening entire markets for them. When you close a big plant which makes a very important chemical, then the entire market has to depend on imports. This happened in many commodities. The first change in this came with the government actively protecting domestic chemical players with anti-dumping duties. This started a decade ago, and that protection basically first helped those industries survive, and gradually the industries learned to lobby in such a way that they could profiteer from protection. A lot of profits which chemical companies enjoy today is coming from protectionism which is being used for profiteering. So that is the case. The second thing, since we already had the capacities, we didn't have to make too much of investment in assets, and we started sweating those assets, the capacity utilizations went up. As they went up, we were able to debottleneck to increase capacity significantly. There was a lot of room for efficiency. This efficiency also contributed to a number of chemical companies making it really big, as they saw the ability to produce far more with incremental investment, which is more in the region of brownfield than greenfield, and they were also able to improve the economics of the business because of how government policies helped them. Over time, the profiteering has been helped by a number of circumstantial events. Take what happened last year. Last year you saw the entire petroleum based input prices going down. You saw alcohol prices going down. So you had a number of companies seeing their raw material price come down significantly. A lot of companies covered raw materials in the beginning of the year for very long periods of time, and they were also able to source material contracts at very attractive prices. Then suddenly, after they covered their costs nicely, you found that there was shortage in their products. So margins nicely expanded for a number of players. Demand was very high because inventories were running low, and you saw the operating leverage also kick in for a number of companies. One peculiar trend which we also saw is that with China going out of the market in many areas, suddenly a number of intermediary products, basic chemicals which were subjected to more operations to create products which are tailored to specific industry needs, suddenly see value addition rise. So you saw them able to add more value, and you also saw them able to sell far more quantity. That has been happening last year, and that has completely changed our perspective of chemicals into a business which seems to be beating cycles, or something which will not be affected no matter what happens to their input costs or global market dynamics. So suddenly we have started seeing chemical businesses as compounders, and a lot of people are projecting it that way on Twitter and elsewhere. But if you have been long enough in chemicals, you will know that cycles will return, and when they return, they will be brutal. So let's see where the chemical companies are mostly are. They are all confidently going into expansion. They are all in an expansionary mode. So capacities are going to be created. A lot of companies feel they have enough cash flows now to put up those capacities. And this is true of the chemical companies and their nature. Whenever they do very well, the first thing that comes to mind is expansion. They need to create more capacity. That's the only way they can grow. So they're ready to do that. The second thing that we are seeing very clearly is that they assume that the capacities they create will come into utilization very fast. Now, if you look at history, this has never been the case. Chemical industries invested money ahead of time and always had to wait. And their assessments of how capacity utilization will be rising and will get filled have always been bordering on the optimistic side than on the realistic side. So that is the history of the chemical industry. Today, they're going into a massive capacity utilization, assuming that the growth which they have seen in the past few years will sustain for a very, very long time to come. But growth in these kind of products can be fickle. Global market dynamics can change. You can see trade coming in from other places, and I don't really see a very strong reason for government to continue to offer the same protection they offer today for chemical companies. So they would rather offer that protection to other people than give so much protection to chemical industry, because clearly everybody knows that the element of profiteering which has been created due to protection is affecting user industries. So the government will try and strike a better balance between chemical manufacturers and the user industry. So that balance is waiting to be struck. Capacity is being created, big investments are being put into place, and demand is being optimistically estimated. So this is the scenario. In past cycles, when this scenario came, there was a strong reason for caution. I see no reason for that cyclicality not to return. The only thing that is permanent in stock market is that cycles return and repeat. So that is something that will happen. I don't know when the things will turn drastically, but even if things turn slowly, you are heading towards a very different scenario than what we had in the last 12 months. Probably the last 12 months for chemicals were a kind of a golden era in a very long time. If you like this video, do share it with your friends who are keen students of investing, who are very keen participants in the chemical trade in different areas and different parts of the value chain. Do stay course with us. We want you to be with us on this journey. Thank you very much.